All right, good evening, everybody. If you are, if you can see me, I can hear my voice. I'd like to just type one in the comment section. Type one in the comment section if you can see me, and then you can hear my voice. Just type one in the comments. I'm so excited about tonight. I'm so excited. I'm always excited to teach, you know, because it's teaching what you have spent years to master is usually fun. Okay, so I like to just type one in the comment section if you can hear my voice and you can see my face. Just type one in the comment section. Right, if you can see me and you can hear my voice, I like to just type one in the comment section. Just type one in the comment section. If you can see me and you can hear my voice, just type one in the comment section. I want to be sure that you are hearing me. All right. Who else is seeing me and hearing my voice? Just type one in the comment section, then we go. This night is a very important night, and I will not want you to miss any bit of it. a very important night. Who else is seeing me and hearing my voice? Just type 1 in the comment section. All right, let's go. Let's go there. All right, now we've been able to establish a lot of facts. I've run through several information from day one. I've taught you many things from day one. I've spoken about many things. I started by introducing you to why you should learn Forex. Then we went on to, who trade Forex and why. And I went on to say so many things. And I think yesterday we started talking about the different kind of direction in the market, and that is where we're going to kickstart today. And then we're going to be diving deeper. And then we talked about the market makers. We talked about the retail trader. And there are two things that we were already established on fact that I don't want you to forget at all. Number one, we said trend is your friend. As a retail trader, trend is my friend. So I wait for trend to fall. I follow trend. See, that is the philosophy of a retail trader. A market maker does not necessarily need to follow any trend. They determine the trend of the market. So as a retail trader, you only make money when you follow trend. 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 Trend is your friend. You only make money when you follow trend. You only make money when you follow trend. So trend is your friend for a retail trader. And we also said yesterday that history repeats itself. History repeats itself. Now, these two statements that I've given to you, you must never ever forget them. They look theoretical at the moment, but they will begin to make sense and make a lot of meaning to you as we progress. As we progress in our journey of becoming profitable in the financial market, they begin to make sense to you. Because when I say history repeat itself, you will find it practically on the chart when we are trading. I always one of the things I used to say in the physical class is that somebody said in 1993 it was a Yoruba man that won the election. Then in 2023, 30 years later, it was a Yoruba man that won the election again. So history has a way of repeating itself. We were able to establish that yesterday. History has a way of repeating itself. But then, as simple as that statement is, it can determine how profitable you're going to be in the financial market, in the forex market, knowing that history can repeat itself. You will see it when we're talking about the trend line. You will see when we're talking about support and resistance. You will see when we're talking about demand and supply. You will see it there. Our history repeat itself. And that is one major secret that you must keep at the front of your mind so that you must never forget it. Okay, so today I want to continue, I want to go a little bit further and share with you, what I have for you for today. So let me quickly share my screen. Okay, first of all, I'll go to my slide, then I go to my chart. Now, I said there are 3 trends that are tradable in the market, 3 market directions, market patterns. You can call it market direction, you can call it market pattern, okay, that are tradable for you to make money in the market. Tradable market patterns, tradable market patterns, tradable market patterns. Now, the first one is the uptrend. When the uptrend, when you see high and lows and highs and lows and highs and lows, when you are seeing when high is getting higher than the previous high, it is called, when an high is higher than the previous high, it is called an higher high. An high higher than the previous high, it is called higher high. So when you see a low, then you see a low, and this low is higher than this low, is called a higher low. This low is higher than this low, is called a higher low. And then this low is higher than this low, is called a higher low. So when the market is forming series of higher highs and higher low, it is said to be in an uptrend. And therefore, when you see something like that, you are only concerned about looking for opportunities to buy. Opportunities to buy. Never forget that. You're only concerned about looking for opportunities to buy. Okay? So when it's forming higher high and higher low, so it be forming an impulsive movement, then a pullback. An impulsive movement, then a pullback. Impulsive movement is the longer move. The why? Because market does not move in a straight line or like a bird. It doesn't fly like a bird, bird fly. No. It makes an impulsive movement, then rest a little, pull back. An impulsive movement, then rest a little. Then an impulsive movement, then rest a little. The rest means retracement. It means correction. It means pullback. Then it makes another impulsive movement. Then there's a pullback. That is how market moves. And you need to understand that, see, this pullback does not mean market has started selling. No, it does not mean market has started selling. And in fact, the reason why many people lose market in a trading market is that they assume that a pullback is a reversal. A pullback is not a reversal. A pullback is just a temporary rest. A temporary rest or a correction of the price. Price is just trying to make a correction. It's just trying to have a pullback, a rest for a moment, and to continue in the direction, in its previous direction, or in its main direction. So market is just resting. It's not selling yet. It's only resting. It's not selling yet. It's only resting. It's not selling yet. It's only resting. Now, this is what I'm telling you now. That looks very simple. It is the major, most powerful secret of you making money in a trending market. I'm telling you. The most powerful secret in making profit in a trending market. Let it sink to your mind that we have an impulsive movement and we have a pullback. We have an impulsive movement and we have a pullback. We have and a pullback does not mean that there's a reversal. So we have two things. We have the reversal, we have the retracement and reversal. If you look at the title of this video, my own concern tonight is to let you understand that there is a difference between when the market is reversing in its direction and when the market is just having a little rest to continue in line with the major direction. You understand? The main trend. So understand that there is what we call impulsive movement. I already showed you in a video that I sent to you just about 30 or 40 minutes ago. I recorded the video which I sent to you on the WhatsApp group just about 30 minutes ago. Now, you have an impulsive movement. You have a pullback. Now, a pullback here does not mean, oh, market has not started selling, because this is why people lose money. Let me tell you one thing. The main reason, if not the only reason, why people lose money in a trending market is when we begin to assume that a reversal is actually, or a pullback or a retracement is a reversal. They assume a retracement is a reversal. That's why They lose money because you see, if you follow trend, you will make money. I told you 2 days ago that trend is your friend. Now listen, if I were you, as someone who is just learning how to, just learning to trade financial market, I'm going to write it boldly on my room. In my room, write it on the walls of your room, or write it close to your wardrobe if you have one. Or you write it close to your dressing mirror. You write it there. Trend is my friend. There's certain thing I write even as of today close to my wardrobe, where when I'm dressing up in the morning, at the door of when I want to open the door of my, on my dressing room, there are things I see there that I just put on a sticky paper. Of course, those things are already inside of me. I may not really need to look at them every day, but when I wrote there, I go there to look at them every day so that I can keep reminding it to myself. Because you see, the beauty of you learning to trade forex is that some things have to be in your subconsciousness, that when you come to the chart, you could quickly identify them within few seconds. Within few seconds. For example, when you open your computer to trade, within 30 seconds, in fact, within 5 seconds, you should be able to tell the direction of the market. You should be able to tell in 5 seconds. Now, after you have been able to tell the direction of the market, you are now, the next thing you will now be anticipating is, where do I join this trend? Just because you know the direction of the market does not mean that you just enter at anywhere, anyhow. No, because you see, you may be tempted to enter a sell at a buy in an uptrend at the beginning of a pullback. You don't want to enter a buy here at this spot. You don't need to enter a buy here. Don't enter a buy here. You wait for a pullback, then you continue. So in an uptrend, the principle is you buy low, you buy low. So when the market is going up, you let it come a little bit lower, then you join the buy to the upside. So this market is coming lower, you join to the upside. It's coming lower, then you join to the upside. So you buy low in an uptrend. That's the secret. You buy low in an uptrend. Now let's come to the bearish. This one is when the market is forming higher and higher low, it's got to be an uptrend. And it's also called a bullish market. A bullish market. The opposite of bullish market is bearish market. I already established that to you yesterday. I even show you. I was able to explain to you why they came about the word bulls or bullish, or the word bears or bearish. I show you the animals. This talk about the bulls, how they used it on to put its prey from down up. Then you saw the bears. The bears, an animal that is clung to pull its prey down and pin its prey down to the ground. So the bear is always pushing the price down. So when the market is forming, look at this now. It's forming a high and a high and a high. It's forming a low, a low, a low, a low. So when you have the high lower than the previous high, it's called a lower high. When you have another low lower than the previous, when you have another high lower than the previous high, it's called a lower high. And then you have a low, a low, a low. So if this low is lower than this low, it's called a lower low. And this low is lower than this low, it's called a lower low. This low is lower than this low, it's called a lower low. So when the market is forming a series of lower highs and lower low, it is said to be in a downtrend. It is selling, it is going down. The market is going down. The market is selling, the market is going down, the market is bearish. We are all saying the same thing. And the beautiful thing about trading financial market is that whether buying or selling, you make money in both directions. You make money when the market is bullish. You make money when the market is selling. All you need to do is follow trend. So when the market is bullish, is buy. You buy also. When the market is selling, is bearish. You sell also. So you make money when you buy in an uptrend. You make money when you sell in the downtrend. So when the market is looking for making lower highs and lower low, it is said to be in a downtrend. It is said to be bearish. Therefore, I will look for the opportunity to sell. I will look for the opportunity to sell in a downtrend. And look at it. It is forming an impulsive movement, a retracement. Impulsive movement, a retracement. Impulsive movement, then a retracement. So you see, the longer side of the movement of the longer side of movement, which is an impulsive movement, is facing down. That's how you know the direction of the trend. Where does the impulsive movement face? When the impulsive movement is going down, that means the market is actually going down. Then we have a pullback. Then we have the retracement. So we have the impulsive movement. Then we have the retracement, and then In this kind of market now, you are only concerned about looking for opportunities to sell. So when you see a bearish market, you are thinking, where am I going to join the sell? Where am I going to join the sell? Now, there are a lot of ways where you can join the sell. There are a lot of strategy you will need to learn that will tell you where to join the sell. It's not just as simple as you say on my board. No, not just as simple as that. But then what we're going to be concerned with in the next couple of days is to show you how and where to join the trend of the market, where to join the bullish market to buy, where to join the bearish market to sell. I'm going to spend the next couple of classes to teach you that. And the moment you catch that, you have become a multi-millionaire in whatever currency you have chosen. You have made it for life. You have made it for life. I'm telling you, you have made it for life. I learned this thing a couple of years back, and it has actually changed my finances forever and ever. It has changed my finances. How do I join the bullish market? How do I join the bearish market? Now, the third kind of market that is also that's as equally important is called the ranging market. The ranging market here is when the market is not buying, is not selling, but then it is moving between a fixed resistance and a fixed support. When the market get a particular price and is not getting past that price, is bouncing back, then it get to another lower price, then it's not going lower that price, then it's bouncing back up. Then when you look at the chart, you see there's a fixed bar. We call it a ceiling. Then we also call it the resistance. Then there's a fixed support. We call it the floor. We call it the support. So when the price is juxtaposing, is moving between a fixed resistance and a fixed support, it is said to be a ranging market. Beautiful. Be a ranging market. And so there is no impulsive movement here because we have equal distance between the support and the resistance. Equal distance. The market is moving between the ceiling. It's like you're throwing a ball. When the ball hits the ceiling, it is resisted. When it hits the floor, it is being supported. So the ball is bouncing between the ceiling and the floor, between the ceiling and the floor, between the ceiling and the floor. It is called a sideways market or a ranging market. Ranging market is the same thing as sideways market. And so in such scenario, what do? You're going to be buying at support. You're going to be selling at resistance. You'll be buying at support. The support is the floor, the lower part of the price range. Then you'll be selling at resistance because at resistance the price is being resisted to go down. At the support, price is being supported and pushed to the upside. It will rally to the upside. And so that is that is how those are the three tradable markets. And the moment you master how to trade this market, you have made it. You have made it. And I'm tempted to say you can say bye-bye to poverty for the rest of your life. I'm telling you. I'm telling you with every fiber of my being that you can actually say bye-bye to poverty forever. You have made it. When you master the skill to join an uptrend, to enter a buy in an uptrend, enter a sell in a downtrend. When you also master how to sell at support, how to buy at support rather, and sell at resistance in a ranging market, you have made it, bro. You have made it. And let's go to the next slide. Very important. And this is where we begin to go deeper. We begin to go deeper. Now, I like to make quotes of people who are the fathers of the markets. Now, historical pattern. Going back to 19th century, the father of technical analysis, Charles Doe, observed that now, what is he saying? It is the direction of peaks and troughs that define the trend of the market. That is exactly what I just explained to you. The direction of highs and low is what reveals the future movement of price. The direction of highs and low is what reveals the future movement of price. You're saying the same thing. Say the same thing. That when the highs and low, when the highs and low is in the is the upper side, is going to the top, it means the market is an uptrend. So we say the direction of the highs and low. When the highs and low are facing down, it is said that's the direction, that's the future direction of the market. That's what it's talking about. That's what it's talking about. Then, so we have an uptrend, we have a downtrend, we have the ranging market. Those are the only three tradable markets, tradable market you can see the fourth one is not tradable. It's called choppy market, where there is no direction, no clear direction in the market. You open your computer and you can't tell whether the market is buying, you can't tell whether the market is selling, and you're not seeing a clear ranging movement of price. It means the market is choppy. For example, gold has been choppy since last night, Sunday, when the market opened. Up till now, I'm talking to you, there is no clear direction in gold. There's no clear direction in gold. It's just choppy. Just when you see a candle that tells you it's about to buy, the next candle is closing bearish. Another candle that is, it's about to sell, and the next candle is closing bullish again. And then you just see bullish and bearish, bullish and bearish, bullish and bearish candles. The green candle, red candle, green candle, just following each other repeatedly. It is called a choppy market. That means there's no liquidity in the market. Just close your computer and walk away. Else, you're going to lose money. You will lose money if you decide to enter such market. And so we have understanding reversal and retracement. And this is one thing that I always want people to get at the beginning. A reversal is defined as a price turning point to the opposite direction. I just told you. Opposite direction of the previous trend. That means when the market is buying, and then when it begins to sell, is the reversal of price. So it's called trend reversal. Trend reversal of the market. Now, a retracement is defined as a price pullback in a trend. So when you see just a simple pullback, not a complete reversal, just a simple resting moment for the market to continue direction. So a retracement does not signify a change in the larger trend. A retracement does not signify a change in the larger trend. How else can I say this thing? My goodness. How else can I say this thing? Which other language can I use? Because you need to get this thing. Which other language can I use? My goodness. Which other language? Which other language? This thing must sink into you. It must sink. Look, the difference between a reversal and a retracement. A reversal is a complete turning of price in the opposite direction. A retracement is a pullback. Retracement is a pullback. Retracement is a pullback. I wish I can ask you to just type in the comment section, but it's long. Let me say it again. Retracement is defined as a price turning point to the opposite direction. Okay, retracement is defined as a price pullback. Reversal is the turning, is reverse, just like reverse. It's just very simple. You are going to the right, and then you reverse to the left. You are going to the top, then you reverse to go down. Reversal, retracement, a pullback. Just temporary rest to continue in the direction of the larger trend. Simple as ABC. It's as simple as that is, it determines whether you will make money in this market. As simple as that. So I'm establishing this basic foundation so that when we now come to the chart, and see, the moment you catch this, you have caught the big deal. As in you have, because I look at people, I look at people who are selling in a pullback. We are selling a pullback in an uptrend. And then you see, and they're not even skillful enough to know, like when you are selling in a pullback, you don't stay long there. You're likely to lose money. So when people are selling a pullback, in an uptrend, there's a skill people can actually use to do that. You will quite to understand, okay, this is a pullback. This is a pullback. And so I'm just going to be sure. I just want to be sure that it's just a pullback. So I'm not going to be staying long on this, but that's for another day. That's for another day. As a beginner, your focus is I'm only going to be buying when the market is bullish. I'm only going to be selling when the market is bearish. Okay, let's start that in the comment section. I'm only going to be buying when the market is bullish. I'm only going to be selling when the market is bearish. Type that in the comment section. I'm going to be waiting for you. I'm only going to be buying when the market is bullish. I'm only going to be selling when the market is bearish. Type that in the comment section. I am only going to be buying when the market is bullish. I'm only going to be selling when the market is bearish. Type it in comment section. By now, you understand the bullish market, and you should understand bearish market. When the market is forming series of higher highs and higher lows, it is said to be bullish. When the market is forming series of lower highs and lower lows, it is said to be a bearish market. And when the market is moving between a fixed resistance and support, it is said to be a ranging market. So I'm only going to be buying in a bullish market. and I'm only going to be selling in the bearish market. Now type that one in the comment section. I'm waiting. I'm only going to be buying in the bullish market. I'm only going to be selling in the bearish market. I'm only going to be buying in the bullish market. I'm only going to be selling in the bearish market. Just make a song out of it. I'm only going to be buying in the bullish market. Yeah. I'm only going to be buying in the bullish market. As simple as that is, it differentiates between, those who donate to the market and those who cash out from the market. As simple as that is. As simple as that is. I took 2 trades between yesterday and today. I was even trading the synthetic indices. The 2 trades are on volatility 25. I made money last night, Sunday night, and I made money this afternoon. After going and coming in. All the 3 instruments forex I wanted to trade, the signals were not right yet. The gold, the GBP USD, and USD JPY. Just sent my pending order and I walked away, and they have not been triggered up to now. But then I trade V25, sorry, V25. And the 2 times I traded between yesterday and today, it has fetched me profit. Are we together now? I'm only going to be buying in the bullish market. I'm only going to be selling in the bearish markets. All right, let's continue. So, thus, when the market, this is where it gets interesting. This is where it gets super interesting. Oh my goodness. Oh my. Oh boy. Now listen. I caught this statement many years ago. Okay? I caught this statement I'm about to share with you many years ago. It cost me money to learn it. I remember I went to one particular state in the country, and a broker came and brought on this particular guy to come and train people. And then at the end of the training, we were selling a DVD. That DVD was about 50K. I can't really remember. About between 30 to 50,000 naira. And I was interested because everything the guy was teaching in that training, I know everything. There was nothing new. There was nothing new to me in all that he was training. It's been quite some years now. And then at the end of this, he said, okay, there's a particular DVD they are selling. I think it was 30K. I think it was 30,000 naira. It was 30,000 naira. I remember it was 30,000 naira. And so I was like, so I indicated I want to buy it because everything you are seeing, and there's nothing new to, there's nothing I don't know there. My goodness. So I bought. I was trying to do give me discount. I think they gave me about a little amount of money as discount or something. So I bought that DVD. I was the only person that was, because I discovered that when I was pursuing them to buy the DVD, they haven't forgotten where they kept it because they came all the way from another state. So they looked for that DVD, and I was the only person that bought it. So I got them 2 days. For 2 days, I didn't look at the DVD. So I remember one day, the 3rd day or so, I was traded gold. So I lost money. I'm like, okay, instead of me staring at my chart to have a revenge trading, let me just sit down with this DVD and watch it. My goodness. There were 2 statements I heard from that DVD. First of all, it was from that DVD I learned to trade fundamental analysis to today. How I trade news. That what I learned from that DVD on how to trade news has impacted my life till today. I can never forget. Only 2 sentences I learned from that book. And this is one of them. This is one of them. Are we still together? Are we still together? Now, look at this. When the market experiences 2 peaks and 2 troughs successfully higher than each other, then the market is said to be in an uptrend. Oh my. When the market experiences 2 peaks and 2 troughs successfully higher than each other, then the market is said to be in an uptrend. When the market successfully experiences 2 peaks, so the peak, I used to call it peaks for P for peaks, T for trough. So I have so when you have 2 peaks, that means P1 and P2, and then 2 troughs, T1 and T2, successfully higher than each other, the market is said to be in an uptrend. How do you know when the market is selling? How do you know that the bullish market has already started? So these fathers of of technical analysis, they theorized, they gave us a theory, okay, that when you see, the moment you see two peaks and two troughs that are higher than each other, uptrend has started. And look at it now. P1, peak 1, trough 1, peak 2, trough 2. At the end of it now, it said the bullish market has already started. Has started like that. So the market is no more selling. Forget about it. It has ended the bearish market. The bearish market has, so when you see the market selling, and then all of a sudden you see two peaks and two troughs successfully higher than each other, it's saying this theory is telling you that look, an uptrend has started. Now, the reverse is the case. The reverse, of course, the opposite is true as well for a downtrend. When the market shows two peaks and two troughs successfully lower than each other, then the market is said to be in a downtrend. My goodness. Do you know that for a certain period of time, I actually spent time just to trade this statement alone. And I made a lot of money. This statement alone became my trading strategy, especially on a lower time frame. I did this thing on 50 minutes. It made me money. How does it go? So the moment I can't, okay, let's say for a bullish market, the moment I see P1, T1, P2, T2, at the end of the completion of the P2 like this, I just place a buy, then I put my stop loss on the T2, and I watch it go. Bam, bam, bam. You know that it's what I'm telling you now is enough a strategy. I see that strategy till today as I'm speaking with you. When I count P1 and P2, P1 and T1, P2 and T2, successfully higher than each other, a bullish market has started. What do? I just enter a buy, put my stop loss at the T2, and then just watch the market going. Is enough a strategy. Don't worry, I'm going to be showing you how to identify them on the real charts. The same thing for the sell. When I begin to see two peaks and two troughs successfully lower than each other, look at it, P1 and T1, P2 and T2 successfully lower than each other. This theory is saying at the completion of the T2, a sell has started. So what do? At that place now, just enter a sell, put your stop loss at the P2 and watch the market go in your direction. Now listen to this. There is no holy grail strategy. There is no strategy that works 100% of the time. There is no strategy that works 100% of the time. Are you hearing me now? So, but I guarantee you that more often than not, you'll be making profit with this. That's just strategy on its own. It's a strategy on its own. Now, I'm about to round up this class right now. Okay, we've been here for a couple of minutes. We've been here for a while. We've been here for how long have we spent this class? We spent 36 minutes. Or let me say 7 minutes. Almost 7 minutes. So let's continue. And so look at it. The works of Charles H. Dawes and his partner Edward Jones. I love these guys. These guys are the owner of the Dojo theory. That's Dojo theory, are the owner of USA 30. Dojos and companies since 1882, back in the end of 19th century, also known as the latest tenet of Dojo theory, state that trend remains in effect until a clear reversal occurs. Trend remains in effect until a clear reversal occurs. Trend exhaustion leads to trend reversal. My goodness. It's really not complex, though. It's not complex. Okay? It's only telling you that until you see a new P1 and P2, T1 and T2 successfully higher than each other, sell is still remains. So that means the market is selling pum, 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 lower and lower low, lower and lower low, lower and lower low, lower and lower low. Then all of a sudden you see that the next high is higher than the previous high. Instead of it to be lower than the previous high, is higher. Then you say, oh, that's P1. Then you see T1, then you see P2, you see T2. He said they're higher than each other. It means the uptrend has started. The uptrend has started. The uptrend has started. Okay. Then I have, so that will be where I'm going to be ending this class on my PowerPoint. I just quickly want to take you to my slide right now. let me take it to my chart rather. Let me take it to my chart. Okay. We've been here for 40 minutes. So let me share my all right. Now watch this. Okay, let's do the 1 hour time frame. Are you seeing my screen? Are you seeing my screen? Can you see chat on my screen? Can you see my chat now? Can you see my chat? If you can see my chat, just type 2 in the comment section. Just type 2 in the comment section. If you can see my chat. If you can see my chat, just type 2 in the comment section. Type 2 in the comment section if you can see. If you can see. If you can see my screen, type 2 in the comment section. All right, let's continue. USD. This is GBP USD. Let me see if I can start from somewhere around. Okay. Okay, so now let's look at it from here. I have the market is moving up. This is impulsive movement, retracement. You see, let's assume this is an impulsive movement. Then you have retracement. You have impulsive movement. Then you have retracement. Then you have retracement. Okay. Then you have impulsive movement. Okay. Then now your impulsive movement must not break. It mustn't break this low here. Now you discover that it has broken it. It has broken. It's already lower than this because your impulsive, the previous your pullback must not break the previous beginning, the beginning of the previous impulsive movement. That is the rule. It's as simple as that. Then you have this has broken it now. This has broken it. This has broken it. Now here is saying that now this now becomes your. This becomes now the moment it's breaking now. You now find out, is it actually started as a sell actually started from here? Because right now it has broken the previous it has broken this character. It has broken this character. Now you are wondering, as this thing started, as the sell started, so this one will now become your P1. This has become your P1. This will become your P1 and your T1. T1. Okay. Now you will count again. Then you have pullback. Then you have impulsive movement. Now this thing has happened twice now. So you now have your P2, then you have your T2. You have your T2. Now, at the end of this, let me delete this. At the end of this now, the market has started in the sell direction. And then you see that from here now, market is now selling and selling and selling and selling and selling and selling till it changes direction again in this place. It changes direction. So where it starts selling now, so you started seeing sell, you started seeing impulsive movement, then you see retracement, then you see impulsive movement, then you see retracement, then you see impulsive movement, then you see retracement, then you see impulsive movement. Then don't forget that it must not break this zone. It must not break this. Then you see this. Then you see this. Okay. Then from here now you start thinking, as a buy is starting or not. That's what I want to share with you today. Now, the moment you count to P1, P2, just know that the direction of the market has changed. So this is where we're going to be continuing tomorrow, continue our class tomorrow, and I'll see you again tomorrow. I'll see you in class again tomorrow. Make sure you watch this video. If there's any part of it you don't understand, drop your question in the WhatsApp group, and I'll see you again tomorrow. So now, the assignment is going to do is this. All of you that have synchronized your trade on your demo account, you'll be showing me what I've just taught you today. You identify the uptrend, identify the downtrend, identify a ranging market. Then you show me your P1, P2, your T1, T2 that shows the reversal of direction, that shows trend reversal, where P1 and P2 shows the beginning of a new trend, which is the reversal of the old trend. You show me that on the group, or send it as DM on WhatsApp. Make sure you do that assignment for the next class tomorrow. Thank you. See you again tomorrow. God bless you.